Morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do this morning is take a look at the equity markets, and yes, the equity markets are once again full steam ahead. Pretty much the leadership in the equity markets has been the NASDAQ market. It's been leading the markets. The S&P and Dow's playing catch up, and in fact that's what we're seeing this morning as the S&P was trading at new highs. And this is really positive action. Groups that are acting very well in the market right now still continue to be the biotech, healthcare sector, internet sector, leisure sector from the travel stocks like Priceline, TripAdvisor, and so forth. So you still kind of want to be in that sector. But one of the other things I want to talk about this morning is what are commodities telling us about the equity markets? Thus far, from the start of the year, commodities have basically been outpacing equities. Now this could be viewed as a good thing or a bad thing for equities. So let's take a look what the relationship is between commodities and equities. Typically in economic cycles, stocks will top before commodities. It's pretty much what we saw in 2007 as the stocks topped in October of 2007. Commodities didn't top till 2008. Then when we get into a new cycle, stocks are usually first out of the gate, then commodities follow. And that may be exactly what we're seeing. And the reason that is the markets just want to get a sense of sort of comfort zone to see if the markets are truly running, and then commodities follow. And that could be viewed as a gauge of economic demand. Now, a few nuances here, meaning commodities have done well because the polar vortex caused natural gas prices to spike. There was a drought in Brazil, which caused coffee prices to spike. However, we did see gold. Gold looked like it was left for dead. All of a sudden, gold's acting pretty well. And energy stocks, crude oil's staying above 100, and energy stocks are acting pretty well. So as long as commodities are going up with stocks, that's still a very positive sign. It tells you the strength of the underlying global economic demand. Now, if we start seeing commodities outpace stocks, that may not be such a good thing, and that's something you can keep an eye on. But in the meantime, you might want to, if you're trading equities, you might want to take a look at some of the natural resource stocks. Now, gold mining stocks pretty much also look like they were left for dead. They're moving off the bottom. Now, I'm not playing any of those. Some of the fundamentals don't look that good to me. But anyways, that's just something to be aware of. However, you look at some energy stocks, stocks I've mentioned before is Continental Resources, CLR, Diamondback Energy, symbol FANG, Sanchez Energy, symbol SN, Matador Resources, symbol MTDR, EQT Corp, symbol EQT. A lot of these stocks are actually moving into new highs, and that's something you should consider for your portfolio. But as always, don't trust me. Let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a good trading week.